Hi everybody, welcome back to my channel. This is Oliver Wiedmaier, founder of Voyage Trading Group. You can find me on Twitter or X at Ollie_all caps. Today I am going to discuss how to capture big moves, and by doing that, we are going to talk about trade management, situational awareness, and market breadth. These things all tie together in order to capture those big moves. So when I look at the market breadth, right, what I'm going to do is just simply look at the NASDAQ or the SPY and just make sure that the market is trending in my favor. And so we can pull up a chart of the SPY here. We see that the price is above the moving averages. I'm not too concerned about the day-by-day bumps and grinds of the SPY or NASDAQ. I'm just really focused that the moving averages are stacked. 9 EMA is above the 21 EMA, the 21 is above the 50 SMA, and the 50 SMA is above the 200 SMA. But I don't put too much weight behind that, but I do want to see it trending above the shorter EMAs, the 9 and the 21. I do, however, put a lot of attention on net highs and lows. What I want to see is an overwhelming number of net highs with net lows decreasing. Right now, we can see there's a little bit of mixed signals because the market is making new highs. However, we have consistent net lows. This is something that I'm paying attention to, but as long as my edge is in favor, I'm going to still be trading. And so that is when situational awareness comes into play. So when you're talking about market breadth, you're talking about SPY, QQQ, IWM, right? You're talking about net highs, okay? So these are the things that you look at when talking about market breadth. But when it comes to your situational awareness, that is really focused on your edge and your day-to-day situational awareness. So for me, I like to trade gap ups, right? And then I also trade continuation moves, which is basically just a short-term pullback in an overall upward trend. And so typically when gap ups are working, I'm not seeing a lot of continuation setups, and when continuation setups are occurring, there's not a lot of gap ups. So I find that having these two different setups that I focus on, I am able to trade and my edge is in favor one way or another throughout the majority of the year. Now that brings us to trade management. I'm going to be discussing the last 1 to 3 weeks of the trades that I've placed, how I've entered them, how I've managed them, and then all that will tie into capturing big moves. And so what we'll do now is we'll just discuss some of my recent trades. So here we have ELF. I placed a trade here on the gap up day 1, and I had a stop at the low of the day. And in order to capture these big moves, there's a lot of volatility in this what I call turbulent zone, right? It's the area around the gap up. And so what I'm trying to do is leave my stop where it is until the stock has moved out of the turbulent zone. So if I were to place a trade here and then move my stop immediately under the day 2, you might miss the larger move. Now, if depending on your situational awareness and the market breadth, you might want to be more defensive, but for right now, we do have a trending market. My edge seems to be in favor, so I'm leaving my stop where it is for a little bit longer. So the stock moved sideways for a few days, and then it put in this nice hammer. So I added to my position here, and what I did was I put a stop loss here. It moved up, and then it came back and tested and actually took me out, and then it undercut and rallied. So again, this is all a part of how to capture the big moves. You don't want to stop yourself out before the big move, but you need to be able to assess your situation and your edge in order to know when you should be moving your stop loss up and when you be moving the stop loss down. For me, I did everything right. I saw that the stock came back in a turbulence zone and it moved higher. So what I felt like was a good risk management. Considering the entire market was pulling in, I moved my stop loss in to protect those profits, and I got stopped out. No big deal. HIMS, you can see I traded this a little bit differently. The market was a little bit stronger here than it was when I placed the ELF trade, and so I did not put that move my stop too soon. I waited for it to come back to the moving averages, and once it came back to the moving averages, I added to the position. I placed the first trade here, and then I added once it was pulling in. And again, the situational awareness, which was the market was a little bit stronger during this first part, or during the end of May, I decided that based on my situational awareness, adding on this kind of dip would have presented a good risk reward. And you can tell I'm up 50% since I did that. I added on this hammer. I have not been trailing on the 9 EMA. I've been trailing below the 21 EMA. So once it came out, you see here, it came out of this turbulence zone. I moved my stop to here. It's continued to move higher, and I move my stop up just a little bit here. And if it recovers here, then I will move my stop to below this hammer candle here. So this is how you capture big moves. Okay, you pay attention to the overall market, your edge, and when you have an opportunity to add to your position, then do so, right? And you don't want to move your stops up too fast, because that is how you shake yourself out before the larger move. And so I always like to place a smaller trade in the beginning, because I'm looking to add on the pullback, because it's very volatile. When we trade these volatile names, they test, and we see that with Netflix, for example, right? So Netflix had this breakout here, and so a lot of people bought the breakout here because it was breaking out into new highs. But it's a little bit extended here. I prefer to buy off of the moving averages. So I like this entry much better. It pulls in, it holds 1, 2, 3 days. You have two tight closes here, and then it has this big range expansion. Okay, so you have two tight closes here, but at this point, this had a much bigger range expansion than this candle. You see how tiny the body of that candle is, and the body candle here has already made the range expansion. So buying here, you are essentially buying a day two. This would have been in the first day, because it's the first range expansion, right? This is the first range expansion after that tight day. And so will this trade work? It might work. I'm not saying that buying on day two won't work. I'm just saying you have a higher probability of success when you're buying lower into the moving average as it's coming out, versus it being out of the moving averages, or not in that 2-day tight criteria that I have. So when this broke out, I saw it. I saw that it's on high volume. I chose not to trade it, and we'll see what happens. AVGO, here's a great example. You have this big gap up. It closed lower. The next day, it had this big range expansion. This is considered a delay reaction. So I did not personally place a trade here, but I do have the Voyage Trading Group. It's a free Discord, and we discuss trade ideas, and we discuss situational awareness. And one of the ideas I shared right at 1700, I marked AVGO to be a good buy. Again, so if this sort of thing happens the day after you buy, you have this huge gap up, and you're already 15% off that moving average, you're gonna want to move your stop up, higher, rather than leaving it low, because you are already extended when you bought it, right? And so these things can work. We can see in NVIDIA, it had that gap up, and then right here, it had that gap up, and then it had that delay reaction. The very next day after the delay reaction, it pulls in or it gaps up, but again, it pulls in, right? And so you're looking for that pull in after the big momentum move. FSLR, this is a really fantastic stock to study. A lot of people traded here because they were trying to anticipate this flag breakout here. For me, I am not interested in this sort of situation because it's rejecting, you see the candles, it's rejecting this line. And so if you're going to trade this flag, you want it to be breaking out of the flag, but only if the action is tight prior to. So this is breaking out of the flag, but you see that this was the range expansion. So if you placed your trade here, right, you would have captured this move. It would have been shortly lived. However, this entry on June 10th is a much better entry than the June 11th entry because this was the big range expansion. You see, you have the tight range here, then you have the range expansion. So buying here, you are buying late. So I'm not interested in this setup here. I did not place any trades. However, I am interested. It's holding these levels here. So I did place a trade here as it closed in that kind of hammer form after this 3 days here. It rejected a little bit here, but I'm honoring my my initial risk, which is placing the trade below, placing the stop loss below this little consolidation here. ON is a great stock to study. Again, you have this gap up into new highs, but it's not coming from a tight base here. And so this is a total red flag. Not interested in this. I'm much more interested in buying this candle here because you have, again, this range expansion from this nice tight candle here. You have a big body here, small body here, and then it's pushing out with a big range expansion. This entry here is a fantastic entry. This would be your delay entry from the gap up here. You can see that this body of the candle here is a very wide range, and then the next day it gets smaller, and the next day it gets smaller, and then it breaks out. You have that nice delay reaction. This is a fantastic entry here. So this is a stock that has been discussed in the Voyage Trading Group. I know a couple people in the group entered here. This is total red flag for me because I want that delay reaction or that breakout to occur as close to the gap up as possible. Buying here would have been fine, right? It wouldn't have worked, but this is a much better entry than here because once it's trading sideways for 10, 15, 18 days, to me, the stock is dead. It's lost the momentum. We want to trade while while the momentum is happening. So trading this range here, this is a nice delay entry here. You have this big body here. You have this nice inside day, right? This body of this candle is much smaller than this candle. Then you have that range expansion. So this meets our criteria to the T, and this would have been a fantastic entry. This it's selling off into the moving average, and then it has a nice hammer, and so this is a good entry, but it would have failed. CRDO, very popular stock. You have a nice delay reaction right here off of this 3-day pullback, trying to trade this flag again. It's rejecting. So unless it would have tightened up and then broke out, I have no interest in this at this point. To me, the stock is dead. It needs time to recover and build more momentum, and then we'll trade that momentum once it comes. So Cava, this is a stock that I'm in right now. I bought the candle here. I left the stop loss at the low of the day. Again, what I am looking for is it to leave the turbulence zone, right? Because it's going to test demand, and if it's holding demand, that gives you the opportunity to add, and then that's how you capture the big move, right? We want to capture these big moves from nice tight entries, and so I bought the candle here. It went up. I waited. I see that it held the moving averages right here, and then it had that range expansion, right? 2 tight days. This candle is much smaller than this candle. It's holding the moving average. So I made a secondary add-on, put the stop below that, right? and I'm just waiting, and I'm leaving it here. I'm not moving the stop too tight. I'm allowing the stock to wiggle. It's still in this turbulent zone. I need it to really push out before I start trailing. And it pulls in a little bit, has this nice hammer. So what do? I add on, I move the stop loss up. So we'll see if it's going to grind the EMAs. It might be a slower move, but we'll be able to catch that nice big move. Dell, okay, so this is a stock that was holding the 50 EMA. It gaps up and holds. The EMA start to turn up. So I place a trade here. I was able to appeal at 5R and at 10R. I'm leaving my stop loss at break even. I'm not going to chase again. I'm going to let the stock move. It held this moving average here, so we'll see if it starts to grind higher, and if it does, then I will trail at the 21 EMA. This is an interesting stock. This is not a stock that I have purchased or have traded, but it has been mentioned in the trading group. And so I know the people were buying this candle because it was breaking out of this, what they were calling a consolidation. For me, look at what this looks like versus what something like this looks like. Right? This is very clearly, it's pulling in. The ranges are getting tighter and smaller, and then it has a range expansion. This is very obvious, right? This here just does not look the same, right? And so we want our entries to be very obvious. We don't want to have to get cute or wonder if the trade is going to work or not. We want to repeat the same one or two setups over and over and over and over again. And so when we recognize them, right, we want to do deep dives so that we recognize them. We know immediately how we trade them because we've traded them 100, 200 times. If you would have bought this gap up here, you would have kept your stop loss at the low of the day. You would have waited for it to get out of this turbulent zone. This would have been a fantastic add-on if you bought here at the gap up or a new trade. And then again, you would have just waited for it to move out. It's out of the turbulent zone, right? The moving averages have lifted higher, and then you could have trailed, something like that. And at this point, you still would have been in the trade, but this big sell bar here is a red flag. The last stock we will discuss is Oracle. It has this big gap up here. At that point, I notified the team, the group. Nice move on Oracle, watching for delayed reaction. Okay, and so we wait 2 days. We get that delayed reaction. I entered here. I took some profits on this candle, and then at this point, the market is pulling in, so I'm applying some situational awareness. I am going to choke this stock off to make room because I have HIMS still on, I have Kava still on, I have Dell still on. So I'm going to cut the newest trades first. And so that's why I did raise my stop losses up. And then instead of leaving it here in the turbulence zone like I've done the other names, because of my situational awareness and the market breadth, I knew the market was pulling in, so I wanted to free up some capital to give my strongest names more room to breathe. When it gapped up, I completely sold at the open up here. And you can see that was my notification, and then I peeled on this candle, and then I totally got out here. And so don't care what happens to this stock anymore. If it sets up, fantastic. But for me, I got a little bit of profit out of it, and I'm good to go. And so this is how I apply market breadth, situational awareness, trade management in order to capture those big moves. So if you learned something, give this video a thumbs up. If you want to follow me on X, my handle is Ollie _ all caps. And of course, free trading content on Substack and my YouTube and all of those things. So I do have the free Discord as well. So thank you so much for watching, and see you the next one.